For part 2, we're actually going to start preparing the statement of cash flows, and we're going to do the next 3 years in class to really make sure you have a good understanding. We're going to jump right in, assuming you've already have the other video down. You kind of have an idea. I know it's not a real fat, solid idea, but you have at least an idea of how the statement of cash flows is set up. So the first thing, remember there were 3 things that we needed to do a statement of cash flows. We need 2 years of balance sheet, and then we need to know how did those items change throughout the year. So that's why I have this column over here. So just for a quick observation, I can see that my AR went from 47 to 36, so definitely it went down, and that's going to need to be shown on the statement of cash flows later. I then have the second item that I told us we needed, the income statement. And then the third thing that we needed were our notes. So some notes that you see here. Cash was paid to redeem the bonds. Another word for bonds, we can input their note payable if that helps, or mortgage payable. I know we didn't talk about bonds in class, but bonds are just another way to raise money long term that we do have to pay back. Land was sold for cash, that's going to be important, and how I sold it for book value. That means there was no gain or loss. That's what that tells me if I sold it at book value. I come down here, the equipment, there was a change in equipment. Obvious there should have been a change in equipment, and there was. This helps explain what happened with the equipment. And then some cash was paid on our note. So this tells me that some cash was paid. And we're going to have more of that type of situation come up in our future type of examples. All right, so the first thing we always started out with, remember from our last video, the first thing you always start with the statement of cash flows is our net income. That's a real good starting place because, well, it looks like I have $400,000 coming in revenue. Is it really $400,000 in cash? Probably not, but it's a good start. We'll adjust it later. And then I have some expenses. This is all of the inventory that I sold. I have all of my other type of expenses. Did I pay money for all of these? Probably not, especially this one. But did I pay cash for all $20,000 of wages? Probably not, but we're going to figure that out and do any adjustments that we need when we look at the balance sheet. Have a loss, that was definitely not money spent, but this is a good place to start. So our statement of cash flows, you're going to have the proper title. Now on this one I don't have a company name, and I don't have a specific date set up, but I'm just kind of giving a combo title here. Statement of cash flows for 2015. That's the year that we're looking at. That's the year of the income statement. And let me see. Yeah, this should have been 2014, sorry, and this should have been 2015. I believe yours are actually correct. Mine, I had adjusted mine previously and then brought it back. So we start out with net income. Then there are 2 things that we always look for on the income statement, and we want to get rid of those right away. Depreciation and the loss. Remember, with depreciation, it makes it look like I spent money, but I didn't spend any money. So I need to add that back. So we're going to make adjustments now to my net income, and we're going to make a positive $17,000 adjustment to pretend like this 17 expense never was really there. I'm going to do the same thing with this loss. I'm going to pretend that this loss wasn't there. So I show that here on my statement of cash flows. I add an adjustment back of $1,000 for that loss. I didn't spend any cash. That's why I need to adjust it back. So now we've done the first part of the operating. Remember, there were 3 parts of the operating section: the income statement, and then the 2 items to look for, and then we go ahead and look up to our current assets and current liabilities. The other thing that I would like for you to get in the habit of doing is off to the side, have another little area, and I'm going to do it right on it, just, or maybe over here, so I don't have to open it up further. But off to the side, and I'll do it anyway. Now I'm just going to do it right here. Off to the side, mark down, you should have a check mark by every single number or have it crossed out because we never use it. Let's go ahead and cross out the numbers now so we don't forget. Of the things we're never going to use. Remember the accumulated depreciation? We never use that. I've already taken care of what I needed to for depreciation purposes down here. Now you might think, hey, these two here are only 13,000 difference, but yet I had a depreciation expense of 17. Well, there's a reason they're different, and that was because I sold some stuff. I got rid of accumulated depreciation when I sold stuff, so that's why there's a difference. That's why we cannot rely on these two numbers. And then I also need to get rid of, I'm going to put these in red to tell me I'm not using them. This guy here, I'm going to put it in blue to know that I'm going to use it at the very, very end. And that's, let's light blue here. Everything else I'm probably going to use, or in some fashion, I'm going to use some of it. All right, let's go to my current liability, my current assets. AR went down for the year, 47 to 36. One of the primary reasons why AR goes down is because cash was received. So if cash is received, therefore AR went down, I need to increase. I need to show an increase adjustment to my net income. That net income doesn't know that I received that extra $11,000 in cash. So my AR went down because my customers no longer owe me. They no longer owe me because they paid me the money. That $80,000 doesn't show me getting paid that money from the AR. All right, we're on to the prepaids. My prepaids went up for the year, which means I spent money to buy more prepaids. Nowhere in my income statement does it show here a prepaid expense account that I spent more money. So I need to show that if my prepaids went up, increase in prepaids, I need to make a negative adjustment. I need to show that, well, it didn't show that I spent money, but I really did. So I need to make that a kind of an adjustment. Now, every time I do one of these, I want to go ahead and mark it off. I have now taken care of those two. I've got one more item of current assets that I need to take care of. My inventory. My inventory went down. And this one, it's a little harder to explain and to make sense without maybe actually doing a full example. I may do that in class. But just remember the general rule. If a current asset goes down, just like the AR did, if current assets go down, that means we saved cash. I didn't buy as much cash or as much inventory to get back to where I was. Therefore, I saved some money. I need to show that as an adjustment. Inventory went down, I had a decrease in a current asset. Therefore, I saved some money. I didn't really get the money, but I did save it. Okay, the last thing that we always do in the operating section, we've done the first two, the income statement, current assets. We now jump down to our current liabilities. My current liabilities went down for the account payable. Account payable, the main reason your bill would go down that you owe is because you paid money. If you paid money, that needs to show as an adjustment up here. Nowhere in my expenses does it show an account payable expense showing that I paid $10,000. So if it's not in this figure, I need to make that adjustment. and say, yep, 10,000 was spent, so I need to show that as a negative. It's just the opposite of what happens with an asset when it goes down. When an asset goes down, we gain money. When a liability goes down, we're losing money because we're paying off our debt. Wages payable. Wages payable actually went up 1,000. That means my expenses, what I actually paid in wages was only 19,000. Because that extra 1,000 here, well, that's on account. That's what made this number go from 7 to 8. So I'm showing a bit too much here. I need to take this away and make it look like it was only 19,000 that was paid. So I need to show that since my increase in wages payable was 1,000, it went up. If any current liability goes up, we are saving money or not paying as much as what the wage expense would have shown. Therefore, our net income would have been just slightly too low for cash purposes. Now I've done all of my current liabilities, current assets, and my income statement. I'm ready to total up the first section. Notice the number is a nice high positive. That's what we want to see. The higher the better as we go through the business. Now we're ready for part 2, the investing section. Remember, the investing section includes all long-term assets. We're investing into our business, so these are items that we would buy long-term. Land, building, and equipment. Well, we didn't have any change in the building, so there's nothing to do there. The only things I'm going to need to check on into my notes, go back to my notes here. Why did land go down? And did it go down because I got money, or did it go down because my customer is going to pay me later? And at this point, whenever we do something in the next 2 sections, anytime we do something in the next 2 sections, we should make a journal entry just to get a visual. So land was sold for cash at book value. Therefore, if land went down 15,000 and it was at book value, that means I actually got 15,000. So my first journal entry to kind of get a visual would say cash was received of 15,000 because I got rid of my land. I sold off a piece of land. Now I can ask myself the 2 questions. Did the transaction involve net income? Nope. These are both asset accounts. Did the transaction involve cash? Obviously it did. So this is something that needs to go on the statement of cash flows for the entire amount that I have there in cash. So I would say a sale of land, and I need to show that I got and received money, $15,000 positive. Now let's go to our, so this one is now explained. It wasn't that hard. We only had one thing happen. This one's a little bit more involved because with the equipment, we had 2 items going on. Let's do number 2. We'll do number 2A first. Oops. Number 2A. And that'll be our first item here. If it helps, you may want to have a T account off to the side to kind of show what's happening. If my equipment had a cost of $25,000, that's what's on the T account for the equipment. So that's what I need to get rid of when I'm doing the journal entry. And if it had a final book value of $21,000, well, that should tell me then what the accumulated depreciation was. So I'm just going to put off here to the side. The equipment had a balance of $25,000. I'm not making the full T account. The accumulated depreciation, well, if there was a book value of $21,000, That means my accumulated depreciation had to be $4,000. 25 less what was in the accumulated gives me the 21. So I have $21,000 book value. If I have a sale price of $20,000, that's what it tells me in my example here. I sold it for $20,000. These two together are going to tell me if I had a gain or a loss. And it's also going to do that when I do the journal entry. But we can go ahead and do it here. I sold it for 20. It was worth 21 on my books. So I have a loss of $1,000. Now let's do the journal. Let's finish it out. It tells me I sold the equipment for cash. That makes it real easy here. What did I get? Money. Why did I get it? Well, the first thing I did is I got rid of my contra account. So I need to also debit my accumulated depreciation. I know from my little calculation here that I'm going to need to have a loss. So we'll go ahead and put that in, the $1,000 loss that I figured. And then I got rid of my equipment for $25,000. This $1,000 loss, I just explained where this 1,000 went or why it's even here. So that's good. That takes care of that guy. We don't need to do anything with it. We've already done something. The equipment, why did it change? It changed because I actually got money. I didn't get $25,000 worth. No, I sold it for a little less. I got $20,000, so that's what has to show up on my statement of cash flows. Sale of equipment, not at what the equipment was worth, because that's not what I brought in. I need to look at the cash amount to say, I brought in $20,000. That's what I put on my statement of cash flows. Journal entry 2B. 2B is easier. All we're doing is buying the equipment. It tells us here we bought equipment with cash. So I need to debit my equipment account for $47,000. And I need to credit, how did I get it? I got it with cash, it says, $47,000. Now I can ask myself the two questions. Did this transaction involve net income? Nope. Two assets. Did it involve cash? Of course, right here. So I need to show over here that I actually spent the entire $47,000 in cash. I can also, if it helps you to visualize, I can explain at this point why my equipment went from 40 to 62. Let's just look at it off to the side here. My equipment started at $40,000. This is just a real bare bones T account. Don't ever do it like this. But I started with 40. Then remember here on my first transaction, I removed 25,000. But then down here in my 2B, I gained 47,000. If you add all of these together, you're going to get 62,000. So I explained why my equipment went from 40 to 62 with the sale and then with the purchase. I don't have anything else to explain in my investing section of my long-term assets, so that is ready to be totaled. Notice the wording here, and this is when you have an increase in your adjustments or your total final figure here, you put net cash from. If you have a negative final balance in that section, you put net cash used. That's just the wording that's that accountants like to use. So net cash used, the total amount spent was more than that was collected in my long-term assets. So I'm going to show that here is that we lost $12,000 in the investing area. The last section is our financing. We've only got 2 accounts left to even explain. And then you'll see that there's one more down here, the dividends. But as I'm going through, I also like to go ahead and mark these guys off as I use them. Because I want to make sure that everything I had in my notes, I have correctly applied to the amounts above. So I only have 3 things left here that need to be, for some explanation is needed. Let's first look at the note payable. My note payable went from 36 down to 32. I come down to my notes. If there's a change in something, I'm going to have a note for it to say why did it change. Cash was paid on the note. That's all it tells me. So that means I didn't buy anything on account, which is true. Nothing here. I bought equipment, but that was all on cash. Nothing else that I purchased is on that long-term note. So my answer for my next journal entry, 3, just number 3, would say, all right, what did I get? I got a reduction on my note payable for $4,000. And why? I spent cash. Did this transaction involve net income? Nope. There's a liability here affected and an asset. So no net income affected. Did it involve cash? Yes. I need to show and make an adjustment that I lost $4,000 due to my note payable being paid on. So I'm going to go up here now. I've taken care of that $4,000 and explained it. Bonds went down, so that's just like a mortgage. Think of it like a mortgage. Bonds went down, way down. So that means I paid it off. Let's check my notes. Yep, I sure did. It says cash was paid to redeem some of the bonds, to buy them back, or to pay them off. So this $94,000, well, I spent money on a payment of the bond. You could say payment on bonds, or in this case I put redemption just because that's what I put in my wording on the example. Common stock didn't change at all, so nothing to do there. The only thing that I haven't made an adjustment to, or I haven't checked off, is my dividend paid. I do need to look at that in a little more detail and show that, well, if there was a dividend paid, the journal entry, I forgot, let's do the journal entry for this one just to show what it looks like. Number 4, I had a bond payable reduction of $94,000 because I paid cash of $94,000. And now number 5, the dividend. It says in the problem that the dividend was paid. So I had a dividend of $18,000, and I'm going to need to credit my cash because it was actually paid. Did this transaction involve net income? No, it did not. This is owner's equity, asset. Did it involve cash? Yes. So I need to show and to make an adjustment to my net income. I paid dividends of $18,000. Total that one up. In the financing section, this is usually a good thing if it's a negative. That means you're paying off your debt. In the financing, if you're losing cash in your financing, that means you're paying off your debt. If you're getting money in the financing, that means usually you're collecting more debt, with the exception of selling stock, because that's not considered debt. And payment of dividends isn't really paying off debt, but it's kind of like it's similar to paying a debt. You're just paying your owners back. Now I'm ready for that final piece where I combine everything together and see, like the balance sheet, did it work out? So the first thing you always do is you go up to balance sheet and you get, what did I start the year with? So if this was the ending 2014 amount, it would also be the beginning 2015 amount. I started the year with 90,000. When I add up then all of these changes, it's time to add up operating, investing, and financing. When I add up all of these, that becomes, I have a negative 20,000. I spent more money in cash than I brought in. So my final cash value at the end of 2015 should be, if I started with 90 and I spent 20,000 more than I brought in, my cash should be 70,000. This is our checkpoint. Does 70 match the 70 that's on the balance sheet for the end of the year? And does my net change match what I show when I add up my three numbers? And both of them do. So I'm pretty sure that I did this one correct. All right, so again, you'll want to come to class with these printed off, of course. You'll want to have this one done. I will want to check it to see if you have it done. If you don't, I will send you off to the computer lab to do it on your own. And then if you get done, you'll come into class and join us at that point. Okay, we will close off here.